If I would talk to a new developer where they should start, if they want to get serious about DeFi, then it's on Ethereum. And I would love to build on all of this. So if there's users and there's ecosystems, I will be happy to contribute. So I'm not really tying myself into a blockchain. That's just stupid. Like, no one should think like that, right? My goal is to build something that is secure and resilient.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. We are now featuring quotes from listeners on the show. Today, we have one from Josh M. Dona on X, responding to my recent interview with former Silvergate Bank chairman Mike Lempres. Josh M. Dona writes, "Such a messed up story. I don't know how Mike and others in similar positions, Caitlin Long comes to mind, keep persevering through all the evil levels of injustice thrown at them over the years. They're true heroes to me. Thank you for shining a light on this story." To have your comment featured, write a review of the podcast overall, or leave a comment on our video on YouTube or X. This is the February 11th, 2025 episode of Unchained. Mantle is building the largest sustainable hub for on-chain finance, launching 3 new products: Enhanced Index Fund for optimized crypto exposure, Mantle Banking for seamless daily financial experience, and Mantle X for AI-powered innovation. Learn more at group.mantle.xyz. I'd like to introduce you to Rock Wallet. This is a digital wallet that puts your crypto under your control. Using Rock Wallet is quick, easy, and secure. Visit rockwallet.com/welcome/unchained for an exclusive welcome offer for Unchained listeners. Today's topic is the future of DeFi. Here to discuss are Stani Kulechov, founder and CEO of Aave Labs, and Rune Christensen, co-founder of Sky. Welcome, Stani and Rune.
Glad to be here.
Both of you are OGs in the DeFi space, and both of your protocols are in the midst of some big changes, while DeFi and Ethereum themselves seem to be at an inflection point. So, Rune, you launched Maker, now called Sky, 11 years ago, which is like just an eternity in crypto. And Stani, you're now celebrating the 5th anniversary of Aave. Why don't you each fill us in on where your respective projects are in terms of recent accomplishments? Rune, do you want to start?
Sure. Yeah, so like you said yourself, Sky, formerly known as Maker, is just an extremely old project, and it's really been through a lot in the space. And I mean, it all started off with this idea that we could go beyond just Bitcoin and speculation, and actually blockchain and crypto could be used for something real. And then from our perspective, what was really important was stability, because having a stable coin is like the foundation of all the other cool use cases in crypto, including something like Aave, which that whole, basically all the really cool DeFi primitives, they depend on having a stable coin that sort of is the unit of account that you make all the other interesting financial things happen sort of against, I guess you could say. The development progressed quite slowly, but ultimately the first version of the stablecoin DAI was launched in 2017. And then it was upgraded to multi-collateral DAI, which is the system that is live today still in 2019. And then after its launch, we had the DeFi summer, and there was this massive growth, huge demand for the DAI stablecoin, and massive growth of the protocol. And then what happened is that while the system really just grew incredibly fast and had such a huge inflow of users, it was really held back by basically being stuck in this sort of the questions of how do you manage a system like this, and how do you deal with kind of the ideals of decentralization versus the reality of how it turns into politics and that kind of stuff, and how it can be very difficult to manage this kind of stuff. And that then actually kind of became the beginning of the transformation into Sky, because increasingly what the people who were sort of who stuck with the project, including me, to try to make it just continue to try to figure out how do we overcome this and sort of just make it this amazing stable coin that's it's a decentralized stable coin, but it feels like you're using a sort of a normal financial product, right? It should feel really simple while being true to the ideals under the hood. And increasingly that turns out to be so heavily reliant on figuring out how to do decentralized operations and how to do decentralized governance. So and that then led us into looking at things like splitting up the project into these multiple independent entities called sub-DAOs, which we now refer to as stars. So there's sort of that's kind of the main category. One of them being Spark is like a fork of Aave, basically, that's structured as a star, that has been one of the recent successes of Sky. And then also as a part of that, basically rethinking the branding so that on one hand we're doing this very advanced upgrades under the hood, but to the end user, the brand and kind of the product experience should be really simple and straightforward, which then includes the rebranding to Sky, and also rebranding and upgrading the stablecoin product to USDS to make it more familiar to end users, and developing an easy to use front end on Sky.money. And that we went through with that whole, like, sort of the launch of this and all these upgrades September 18 last year. And now it's really starting to take off. So since the launch, we just passed the milestone just like a week ago or so, that there's now more, like, of the total supply of stablecoins in the system, more than half of it is held as the new USDS ERC20 wrapper.
Yeah, I think it's so fascinating to look at the trajectory, because I remember the first time anybody ever mentioned Maker to me back in the day. Like, maybe this was, I don't know, 2015 or 2016, and they made it sound so complicated. They kind of didn't fully describe it, because they were just like, oh, and I think like what they were talking about was the original collateralized debt, whatever, I forget even the name of it, but CDP, which obviously when I learned about it, I was able to understand it, but it was just like, at that time it was so foreign. And so it is just fascinating even to see how your system is now, just connecting more with real world assets. Like, it really feels like that vision that you had back in the day is coming to fruition. So Stani, Aave also has a ton of recent updates. Do you want to tell us about the highlights?
I mean, a lot has happened over the time, and I think that's the way that Aave works today is quite expansive. So I think when we started building Aave 5 years ago, and even Eatland 2 years earlier, in 2017, we basically were approaching the space more from like experimentation perspective of what we can do, what kind of financial behavior we could create as primitives on chain, and then how we could actually make use of those, and how we can get better, faster, stronger finance. And I think what you mentioned, Laura, about the complexity that goes to these early primitives, whether it's kind of like the Maker CDP, or even what Aave used to be, Eatland, or the way Aave works on the borrowing side. The reason that I think there's a lot of complexity is because these systems are end-to-end transparent. So when you're trying to explain Maker, or like, let's say Sky, or Aave today, you tend to explain everything around it. And I think that's the reason why, for example, like, we get into that complexity. But on the surface level, when you think about the main use case that Aave has, it's just a simple thing as earning interest on your dollars that happen to be on the blockchain. And that's what's the majority of the use case. And then obviously you're able to borrow and do different types of other transactions, but same kind of like applies to Maker. So it comes from the background that's how we build these systems of software on chain, and basically how we marketed them to early adopters that actually were in the space and were, because of that decentralization or permissionless or trustless properties, and wanted to basically reflect with those with their values. But the future users of, let's say, Aave Maker, they probably won't even know much about how Aave or Sky works. They will essentially consume these protocols under a service, the same way as we're using email today. So we use certain types of emailing protocols, but there's clients that abstract a lot of that away. So everything we see is just a subject, recipient, and the actual message as well. So I think that's kind of like the path where Aave has been going. There's still a lot of infrastructure we're building. We grew from zero up to having 34 billion worth of net deposits in the past year. And half of that growth came actually in 2024, which means that there's some sort of a DeFi renaissance happening. If you look at both Aave and you look at both Sky, there's a lot of growth that was happening actually last year. And for us, that growth is happening a lot on Ethereum mainnet, but also on these L2s that basically the Aave protocol has been deployed, because it's the same piece of code that can be just copied across all the EVMs and supporting those ecosystems and their use cases. We're also building non-EVM deployments of Aave, starting with, for example, Aptos by building in Move. And that's the technology that we choose as a first step out of non-EVM, because we want to be where the users are. And also Aave has Go stablecoin, which came about when we wanted to create predictable borrow rates for the Aave users within the Aave protocol. And that's been growing and actually expanded to, it's in mainnet Arbitrum and then expanded into Base now and Avalanche. And the biggest thing we're working on now in terms of the whole kind of like evolution perspective of Aave is the V4 that brings a lot of interesting use cases, makes it easier to integrate with RWAs, and that's a big kind of category.
Yeah, the point you made about how it feels like both of your protocols started off as being for crypto native people, but you're kind of shifting to understanding like not everybody will understand how everything is, how everything works under the hood, and trying to appeal to that audience. Like I feel like the rebrand to Sky is part of that as well. So how do you guys think about doing that? I don't know if because I know obviously, Stani, you're having this Aave 4 that's going to launch soon. Like, I don't know how, your thoughts about how that future transition will take place, or really it's a current transition, how Aave 4 meets that. And, Rune, how you feel like Sky is also doing that. So yeah, either one of you can go first in addressing how your project is navigating this transition.
Well, I mean, there's one observation I want to make I think is interesting that I realized a couple of years back, which is counterintuitively, the simpler you want the product to be for like the end user, that's kind of, just like a normal person and they don't really want to, spend too much time researching all that crypto stuff. Like this, the more you want to deliver something to them that acts as they expect, the more complicated you have to make it under the hood to kind of like account for all the things that then need to be the way they expect, right? So if you look at like a really simple stablecoin, that's something like Rye, right? So that's a design of like a stablecoin that only uses Ethereum as collateral, and it behaves in this like very predictive way and has very limited governance. But the problem is then you can't keep, like the currency can't remain stable against the dollar the way people would expect. And it also cannot really provide a return that's also sort of like what people would kind of generally expect to get on their dollars. That's possible to do with Aave and Sky in various forms, right? But what that then requires is this like huge, basically network of contributors and risk advisors and risk parameters and sort of real-time monitoring and like this massive infrastructure. And in Sky's case, also this huge legal infrastructure for tapping into real-world assets like treasuries and centralized stablecoins. So I think it's somehow like you have to kind of absorb the complexity by the protocol in order to let the user kind of just get a really simple experience. And on the other hand, if you give the user a very simple product in their hand, then they have to kind of be pretty smart about like not falling in the pitfalls. And like, let's say, I guess something like buying Bitcoin and then thinking, oh, this is it, really simple, this can't go wrong. And then it has a huge crash, which happened to me early on. I mean, that's what got me into stablecoins in the first place, basically. That you just like, you think crypto is nice and simple, but then it crashes on you, right? And then that can really push people away, even though the design is so elegant and simple. And I mean, so from Sky's perspective, it's actually that we're really embracing this, right? So we're really building up the capability to kind of eat complexity and abstract it away for the end user, so you can deliver the best possible experience to the end user, which means like really solid stability, and then very attractive savings rate. And so the savings rate, that's kind of like the key, only one of the key features of a stablecoin, or any DeFi product really. And the better a savings rate you want to deliver, that means you need to be capable of getting a better risk-adjusted return, and that requires the ability to diversify into a lot of different assets, so you don't put all your eggs in one basket and you kind of risk people actually, putting them in sort of a financially insecure position. And so that's kind of like, that's the back end, and I guess the ultimate kind of endpoint is to really get heavily into applying AI to decentralized finance. And that's generally something I just think in general, that's like where it's all going, is like, this is all going to be about deploying cutting edge artificial intelligence and sort of all of these improvements, like all the technological progress that's happening in large scale data capabilities and AI and decision making, to use that to sort of run the system on the back end. And then on the front end, you just offer people USDS. It's a stablecoin from Sky that's worth $1, and then you can choose to get the savings rate. And there's a total of more than 8 billion USDS in circulation now, if you count both the USDS wrapper, but also the kind of the legacy DAI wrapper.
I like what Rune said about getting into stablecoins when he got tricked, because partially I like using Aave, and I like using stablecoins, USDS, and like Go, and all the things that in DeFi. Like the reason we're here today is because like we're using these different primitives on an ongoing basis, and it's kind of like the same story for me in the sense that I wanted to figure out how you can keep your ETH, use it as a collateral, and borrow against. And that's where kind of like the idea of like ETHLend and Aave later evolved. But I do think that's it's a big meme of thinking like how we get this technology and use cases into mainstream. But it's really because a lot of the stuff is very simple. It's just about the bridging, like how you actually get a user that doesn't have a wallet, has never interacted with the blockchain, doesn't understand or have willingness to spend time on understanding like what the fuck is Ethereum and all these L2s and these different networks and all this complexity, and on top of that, basically understand all these protocols, what DeFi actually is, and so forth. So it really is as simple as creating a very easy way from going to fiat, from fiat to Aave, USDS, or let's say as USDS to the savings rate without knowing anything. Now, how do we plug in this to our users? And I think stablecoins are gonna play a bigger role. So both Aave and Maker ecosystems, they have a stablecoin, but you have all these fintechs that are actually looking into this opportunity, like how they can tokenize their reserves and get it on chain and then used in DeFi. Those are kind of like connecting points as well. And then later connecting savings products, connecting the lending protocols into their infrastructure, their application specifically. So I think we're just like entering into a phase where every other kind of like a key piece of the thing is solved besides privacy. And now we can like focus on solving that kind of like a US challenge. But there's also a caveat. So there's not a lot of good application builders and designers in DeFi or in the Ethereum community. It's very scarce talent pool at the moment. So that's something that needs to be solved if we want to actually see DeFi integrated to everything where traditional users effectively are.
So in a moment, we'll talk a little bit more about some broader trends in DeFi, but first a quick word from the sponsors who make this show possible. Mantle is transforming the future of on-chain finance. With a $4 billion treasury and successful products like Mantle Network and METH Protocol and Ignition FBTC, Mantle is launching 3 new innovation pillars that will bridge blockchain with everyday banking. Enhanced Index Fund, offering optimized exposure to BTC, ETH, SOL, and USD through advanced staking opportunities. Mantle Banking will deliver seamless blockchain-powered services. Mantle X brings AI innovation to decentralized finance. Experience the future of finance with Mantle. Follow Mantle on X to learn more about the next generation of on-chain finance. What makes Rock Wallet so special? Well, has the thought of your crypto being compromised ever kept you up at night? Yeah, us too. Rock Wallet is here to take that stress away. It's built with the security of your assets as the #1 priority. Rock Wallet is SOC2 compliant, FinCEN registered, uses 2-factor authentication, and the tools just keep getting better, with more upgrades coming in 2025. Right now, Rock Wallet is offering $75 in LTC for Unchained listeners to give Rock Wallet a try. Sign up and make your first trade by March 31st to qualify. Visit rockwallet.com/welcome/unchained to get started. Get some of the highest rewards on ETH with the High Growth Vault by Kelp. High Gain leverages blue-chip DeFi strategies with RS-ETH across Aave, Pendle, Usual, and Elixir, managed by strategy experts UltraYield and Upshift, to get you 20+% APR on ETH, all in a single click. Deposit your assets and receive HG-ETH, a reward-bearing token that represents your vault position while keeping you liquid in DeFi. Trade or use HG-ETH on platforms like Pendle, Balancer, and more, while still raking in yields. It's time to get high on rewards with High Gain. Deposit now at www.kelpdao.xyz. We have another listener comment responding to the interview with Mike Limpris. Sid Degen writes on X, regulatory caps throttled Silvergate. Key lesson, manage exposure before growth gets unsustainable. Again, if you want to hear a comment featured on the show, please write a review or leave a comment on an episode on YouTube or X. Back to my conversation with Stani and Rune. I also wanted to just ask generally about DeFi because TVL and DeFi peaked in 2021. And it has increased in the last year, but it's still only roughly half of where it was at the last peak. And I wondered why you thought it hadn't at least, gone past the last all-time high. This is obviously also happening at a time when there's a lot of angst in the Ethereum community about all kinds of things. But yeah, I was just wondering if you thought that was affecting DeFi or just, why it is that it maybe hasn't taken off as much as we might expect.
I mean, the DeFi metric, first of all, it doesn't really fit for every protocol. For Aave, it fits because in some ways that you can measure the trust in the smart contracts and the net deposits and so forth. But for example, trading facility, it maybe means less. So there's more assets off chain, even when they're actually trading and executing on chain. But overall, I think that the most kind of outcry about Ethereum is mainly, because of the price action. I don't think people really understand that most of the things on DeFi are on Ethereum because it has a really good to build DeFi. And it's something that is very overlooked. So if you go today to another ecosystem to build complex decentralized finance, you're going to miss a lot of tooling that exists already in EVM. So it's the same as going back in 2017 or 16 and building on Ethereum and missing all this tooling that makes you build more safer protocols. And I've argued this online with people who are developers, and I feel like they still don't understand because you don't really understand this unless you go and build something that has to be mission critical and has the risk of complete meltdown. So once you actually go there and realize what the processes are that has to be in place and the diligence, then you realize that a lot of these networks are completely focusing on the really wrong things than they should be if they want to attract DeFi. So that is very overlooked in my opinion. And then about the TVL in general, I think we're in a kind of like a spot where the TVL moves a lot with the market cycles. And I don't think that's very fair assessment, because the valuations of a lot of these assets that are used as a collateral, for example, they inflate when the markets are on a trending upward cycle, when we are in a bull market, and then they're decreasing on a bear market. I think a good indicator to monitor is actually stablecoins on chain, and how much of those stablecoins are going to DeFi protocols. And I still think we're in this kind of like a weird mezzanine period where we built a lot of native infrastructure, native asset support, liquid staking, restaking, and being used as a collateral. And then at the same time, we're entering into this new world of RWAs and seeing institutions like BlackRock and almost alike that are actually starting to bring these traditional assets on chain, and those will end up into DeFi protocols as well. So to get to that point where DeFi will be at 1 trillion TVL, we need that traditional institutional integrations and tokenization piece. And we also need more stable coins on chain. And that comes when we have things like fintech starting to integrate decentralized protocols as things become more clear to them about the offering. The security comes more clear as these protocols keep surviving and being stress tested of these events like the past week. So I think we're just in a place where a lot of this stuff is getting built, and in 2 years from now, things will look like completely different than it is today.
And, I agree with a lot of what you said. The one part where you said you feel like it's mostly just people being unhappy with the Ether price, when I also look at the fact that it just sort of looks like Solana has more momentum right now, where, the Solana was the center, or is the center of the main activity in crypto, the biggest trend. And in 2024, this was the first year to attracted the greatest share of new crypto developers. I think those two facts are quite important. So when you think about those, like, how do you also think about, what we were saying about the price and everything? Like, do you worry about those two things I just mentioned?
Not really. I think the more developers in overall on chain is better. It doesn't matter where they start or end up with. I will be actually more happier Solana to have more developers that are building resilient, safe, and secure DeFi. And a lot of these protocols are tested when the markets are going to go down cycle. Then you actually see where these implementations resilient, where the community decisions actually resilient. And Aave and Sky are protocols that have been able to actually go to those cycles. So I think that's where the actual the big testing actually happens in production. But at the same time, I think the developers that are on Solana, they might be building more of things that are related to, for example, meme coins and whatnot. But slowly, as you get introduced into, and the same thing can be on Ethereum ecosystem for people who are building on Base, for example, they get into the space from one interesting angle, but then as they research more into DeFi and what could actually happen here, what we're rebuilding, the whole traditional financial system, they get excited about it and they will build. So I do think, yes, Solana has got a lot of mind share, and they have a really good kind of like a marketing department, in the sense that the community and some of the key individuals are constantly saying things that today I actually was reading about a tweet where the Solana's foundation president said that there's a product that is on basically Solana that is better than Aave. It's the same thing as Aave basically, but a little bit outdated than what exists today on Aave 3.3 essentially. So people who are talking and creating these narratives, they have a lot of disconnection of the reality. And that's fine, because I don't expect everyone to actually go deep and understand how Aave works or how any of these things works. End of the day, like at least I think that's any net developer, any net innovation, an actual innovation, not just like taking something and bringing it to another network. That's also great if there's users and usage for that. But I kind of like hope that we see net new innovation, and that brings us closer to more mainstream. So I do think that Ethereum overall should be worried in the sense that is the innovation and level of innovation where it should be. I don't think that's the case. I think there's a lot of innovation missing at the moment. Whether they should be comparing to Solana, I don't exactly know where that is the key here. The key is how do we build more and better things that gets us closer to these integrations. And that's where like a lot of these things that we're building here, like as USDS, it's a savings products from Sky, for example, or Aave's basically before, or getting these products more in a simple way, simplified to end users, are going to be really key here as well. And the tokenization as well, because I think tokenization will be everywhere, not just on Ethereum, but there's really good network effects to have that tokenization in Ethereum, because Aave is probably it is the only place where you can borrow $1 billion worth of stablecoin liquidity in one transaction, and you can't really do that anywhere else. And that's a scale that institutions should be looking at in the future.
Yeah, just for listeners, the exchange on Twitter that we were talking about was Alex Svanovic of Nansen tweeted, when Aave on Solana and Kyle Samani of Multicoin, which are huge investors into Solana, responded Kamino, which is sort of the equivalent of Aave on Solana. And Alex responded, but Aave is 10 times larger. It would be a big TVL unlock if Aave users could simply switch chains. And then Lily Liu, the president of Solana Foundation, tweeted, but Kamino is a better product. Plus, metrics today are not metrics tomorrow. So yeah, when I saw that, I was like, I have to ask Stani about this one.
Well, and all kind of like this fits aside and like all this like drama aside, I don't live in a world where I don't look at Solana in the sense that it is a potential place for Aave to expand. But the reality is that we don't build experimentations. If we build something, we build resilient infrastructure. We have to ensure it's secure, because if it gets the Aave stamp, the approval, that's going to be a lot to a lot of people, a lot of institutions and bigger users. And if we are going to expand to Solana, we have to put that work into place. So it's not as easy as, for example, expanding to, especially for new listeners, like it's not as easy as expanding, let's say, Aave into a new L2 or EVM network. It's basically writing complete code base from scratch and analyzing the whole network, any particular edge case that could cause that issue within the protocol, and have that diligent standpoint. So it's not impossible. It's more possible than impossible.
And one of the main complaints about DeFi on Ethereum is fragmentation, and you're resolving that, I guess, with Aave v4, which has this unified liquidity layer. So I did also want to ask Rune, because you, did decide to launch Sky and Solana. So obviously you're making a different choice than Aave, at least for now. Why did you decide to launch there?
The advantage of the main product of Sky being USDS, which is just a stablecoin, is that we don't actually nothing. Sky didn't even build anything in Solana, sort of natively built. I mean, if that makes sense. The expansion to Solana happened through the wormhole bridge. So Sky simply tapped into this existing, very well developed infrastructure of wormhole, which is which is set up to basically bridge tokens on Ethereum over to Solana. And then the second major kind of feature that's available in Solana is the same thing that allows Sky to offer the Sky savings rate on USDS. So the standard 8.75% that you can get on your USDS, no matter where you hold it. You can get that on Aave, and the reason why that's actually being done through Aave's liquidity mining system. And so that same system is also available on Kamino and Drift and a couple of others of the DeFi protocols on Solana. It's a bit of a shortcut because what Sky's doing is it's tapping into what's already there and like building on top of that in a way that makes it really easy. And then as a result, it's possible to deliver this thing that Stani is talking about, right? That of course, when you have USDS somewhere, when you're offering the Sky savings rate on Kamino or something, like it's very important that it's not some hack together thing that's going to blow up suddenly. So the fact that it's possible to make this kind of integration really, really easily just makes a huge difference in terms of being able to, it's possible to do the expansion without basically having to just like put in a huge amount of work up front without even knowing if the users are gonna come there. And then now and then what's great about this approach is then now that basically like Sky's found at least some level of product market fit, right? And there's about $100 million of USDS on Solana, so there's about 100 million of demand for USDS, and that's enough to justify then like further investment and further effort put into building out some core Sky features on Solana and basically enabling. I guess actually, the thing I think when people are talking about this question about like getting Aave on Solana, right? What they would really like is they would like the scale of Aave, right? The economies of scale of this, like the big DeFi energy that comes from like the really big DeFi protocols on Ethereum mainnet, which is really, Sky and Aave and maybe a few others like make up that core of like the vast majority of all DeFi liquidity scale. And one of the really big innovations in Sky that's sort of like a later innovation that expanded on top of the original sort of early design of the decentralized stablecoin model is what we call the allocation system. And so this is a mechanism that allows Sky to kind of not just have to like, so basically, for instance, Aave, even when you deposit USDC on Aave, or borrow USDC on Aave, sorry. So if you like put your Ethereum on Aave and you borrow USDC, you're potentially actually collateralizing the USDS stablecoin. Like even if you don't know you're borrowing from Sky, you might be doing that, and that's because Sky is capable of lending into Aave through this thing called the allocation system, and also lending into Compound and Morpho and all these other protocols on Ethereum mainnet. And then the next step is also being able to do that, for instance, on Solana. And then now you start to get both sides of the equation, right? So you both have the ability to tap into the savings rate, but also potentially borrow USDS and borrow kind of like the USDS collateral. And while this is not going to be, like in the long run, obviously, I think it's just a matter of time. But eventually, you will have Aave and you will have all the major protocols. They will be in all of these blockchains, and they will become invisible in the end, right? Like you just sort of like use all the blockchains and you use all the protocols, and it's only like machines and AI and robots under the hood that is sitting and arbitraging and shuffling money from blockchain to blockchain. And as an end user, you're not going to care about that in the long run. But in the short run, it's like I think it's a major unlock that Sky's basically able to use the kind of the model of the stablecoin as a big piece of liquidity infrastructure that can basically sort of allocate the liquidity where it's needed to be, and then help with at least relieving some of that demand for like, I guess the Aave scale. So even if you're on Solana, you won't be able to borrow directly from Aave and Solana. You might be able to borrow on Kamino, and then what's happening is actually that like there's people depositing USDS into Aave on Ethereum mainnet, and the capital they're depositing in there is then actually bridged across to Solana, and then it's deposited into Kamino, and then somebody else borrows it out of Kamino again, and that way you can achieve that kind of connection, which I think is pretty cool, and allows for this like very expansive and sort of fast moving hooking up of all the different components of DeFi together.
I actually do want to circle back though to this question about just like when it is that a project will choose to deploy on this or that chain, because, Stani, as you mentioned, you are, or Aave is going to deploy on Aptos. And so I can understand there are certain advantages there, because the move language, has certain things built into it that are just sort of purpose built for DeFi in a way that, Solana, frankly, is not. Ethereum also was not. But as you mentioned, because so much growth has happened on it, there's a lot of foundational stuff built into the system to kind of help create those checks that aren't there, through the language itself. But, as we just discussed, there's a lot of user activity on Solana, and you probably also saw this past weekend, there was a controversy about comments that Chao Wang of Alliance DAO made, where he said that a year ago, he would not have had an opinion on whether one of his startups should, or one of Alliance DAO's startups should start on an Ethereum layer 2 or on Solana. But then now that he's seen this happen multiple times where startups launched on both, he said, quote, "On Ethereum layer 2, there's no traction, no users. And magically on Solana, it just works. I've just seen so many examples that at this point, it's irresponsible for me to recommend founders not to build on Solana." So, it just feels like, like I was saying earlier, that there is momentum there. And sometimes when I'm looking at the angst in the Ethereum community, it feels like Ethereum has this long roadmap, and, maybe they're building with this confidence that they'll be around in the future. But some of the changes that they want to make and have planned, it looks like it might take a while to get there, to the point where, because crypto moves so fast, like I am wondering, like, is that going to be fast enough for just how quickly things can shift in crypto? And so I don't know if that worries you. What if like Solana just takes off and Aptos, it has certain technical advantages, but it doesn't ever get the users.
Yeah, you raised a good point that none of these networks really has been particularly designed for like a specific, like a DeFi use case, like maybe like Aave. Stablecoins, kind of yes, because they existed already, like in certain forms before Ethereum, and some kind of like DEXs and fundraising contracts and whatnot has been in mind. So like I wouldn't discount the fact that you could build, let's say, really good DeFi on Ethereum. It has a really good ecosystem, really good auditors and developer community. The tooling is amazing. So like the threshold to build, like if you're a new developer and you want to build DeFi, the choice is actually Ethereum, just for the tooling perspective, because you can basically impersonate accounts. You can fork the blockchain. You can mine empty blocks. You can do a lot of the simulation tooling, advanced simulation tooling that is important for DeFi when you're building, let's say, collateralized products or interest rates or anything where you have this pricing component, and fuzzy testing implemented directly into Foundry. Like there's just like generations of better tooling from, let's say, Truffle to Hardhat, then newer generations to Foundry. Like that evolution is really powerful tooling. And then at the same time, these other ecosystems like Aptos or Solana, I would not discount the fact that you can build actual DeFi, but you have to approach from a completely different perspective. So those are good places for advanced DeFi developers to build DeFi, because it has the starting point and the threshold is higher, because you don't have the same mature tooling and environment, and that's fine. And it depends also on your product. So for example, a lot of the success of Solana, for example, comes from meme coins. And I think it's interesting because you have people coming on chain, doing a transaction, buying a meme coin. Maybe out of the pump.fun users, 99 point whatever are losing money. Maybe there's a theory that's how you onboard them on chain. I don't know, but maybe if you're building something where you have this type of a component, maybe it's interesting to build there actually, and there's more real estate as well. So I don't discount on building these other networks, but if I would talk to a new developer where they should start if they want to get serious about DeFi, then it's on Ethereum. And I would love to build on all of this. So if there's users and there's ecosystems, I will be happy to contribute. So I'm not really tying myself into a blockchain. That's just stupid. Like no one should think like that, right? My goal is to build something that is secure and resilient. Now, when it comes to Ethereum's the L2 strategy, it is quite clear that you can actually go into, Solana, it's one entry point. Ethereum is kind of like a multi-entry point. So you have the mainnet, that's too expensive. It's basically for really serious business. And then you have L2s. They're very young in the sense that you have multiple L2s from like Base, Arbitrum that do a lot of DeFi. You have L2s that are focusing on other types of things. Lens Chain is one of the L2s that is focusing on social fi and decentralized social. So like you have this kind of like different paths, and even Sony is building their L2 on Ethereum for their use case, and Ondo is building an L2. So like what this says is that the paradigm is different now. So like it's not about coming to Ethereum. You come to Ethereum out of some of these L2s, and then you're part of the whole ecosystem. What I like to question is that is this fair for the mainnet? Because what is happening now, if you look at, for example, Base is charging sequencer fees, so the transactions feel very low on L2s, right? With the blob market posting blob transactions, but at the same time, Coinbase and Base are making a killing on a centralized sequencer. So whether this is actually fair for Ethereum, where they're using the data availability, and how Ethereum should actually approach this issue. That's why there's this kind of like discussions and topics of like having, native L2s on Ethereum and having more beefed up Ethereum. And I'm more favorable of that. So like I want to actually see that you can have an entry point into Ethereum, and you see the beautiful Ethereum logo, and kind of like that's your entry point. Let's call it Ethereum Lite, okay? So to make it easy, and that's your entry point. Not Coinbase, not like, and let's make it actually decentralized, and that's your entry point. And then you can do transactions on mainnet if you are moving bigger funds. But I think that's the kind of missing piece where Ethereum is stepping too much back as a kind of a network, and the social layer of crypto is kind of like panicking about it and seeing like, well, you have these L2s, but like, okay, how decentralized are they? They have the roadmaps and whatnot. So I do think if you compare all of these different networks, Ethereum, it takes time to move, but it isn't as slow as you think about it because of the volume that is actually securing. If you look at, for example, Aptos, a lot of things are upgraded very quickly, even month-to-month basis, if there's some new innovation, because the reason for that is because they can do it. They have less risk at stake at the moment, whereas Ethereum is more of like a bigger internet computer and more stakeholders. People want it to be boring as well because you want to ensure it's secure and there's no changes that you have to review on ongoing basis. You want that kind of like a hardness and resiliency there. So Vitalik also said a couple of years ago that he wants to see a lot of the innovation on L2s, and then if they work well, they can be implemented into the mainnet. I'm in the favor of path where let's make one clear native kind of like an entry point that is an L2 that the other L2s can actually benefit if they connect to this kind of like a network or like a messaging solution, and still have that mainnet there as a way to have the full security. So that's my take on that.
Yeah, and also want to, I mean, as somebody who is like a major Solana bull, I don't own any Sol tokens, so maybe not. More like I'm bullish on the tech. Like I love the culture they have, like the approach to like going faster, and what is it called? The
moving fast and breaking things.
Yeah, no, it's like the slogan. It's like increase bandwidth, reduce latency, right? This like single-minded, like faster, 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 right? And I think that's really great. And I love that approach. It's like this sort of the polar opposite to like the Ethereum, like, don't touch it unless you really know why it was there in the first place, right? But the thing is that if you look at USDS, so USDS did this like major subsidized, like incentivized launch on Solana, right? With like a lot of effort put into, and a huge investment put into launching on Solana. Maybe not a huge investment, but still like a pretty major expense to kind of get a foothold on Solana, right? And that got the USDS supply there to like 100 million, which is like, I mean, that's pretty good for Solana because DeFi is still quite small there. But it's sort of like, it's actually like a blip. Like it doesn't really register compared to like the overall scale of USDS, which is like 8.3 billion in total, right? And then in the same time that the Solana, like the USDS supply in Solana grew to 100 million, base, the launch on base, which was done with like very little marketing, and it was sort of just like launched and like enabled, and that's about it. That's kind of like growing organic, and like that's now at half the size of the supply on Solana, and it's continuously growing. While the Solana scale more like it sort of it kind of got a bunch of initial traction because of all the incentives, and then it's sort of like it's stable, but it's kind of waiting for the next push. I guess is how I feel about it personally. That they're like Sky has to do something more. And definitely more things are coming, as I said earlier. It's enough to validate that there's definitely demand and there's a market on Solana. But meanwhile, if you look at something like Base, it just grows by itself. Like USDS just gets adopted. Like and then you look on mainnet, and on mainnet the USDS supply there just like grew by 2 billion in the last couple of weeks. So I guess this is all like this point of just like the scale of Ethereum DeFi is just so crazy huge, and it just kind of like grows by itself in a way that just. Yeah, it's like a force of nature, right? And
it's like a network effect.
Yeah, it's like, I mean, it's an extremely strong network effect, right? Nothing comes close to it anywhere else. And I am so convinced personally that this type of value is that's 90% of what matters. Like the technology and all that other stuff, like even like the culture and the memes, and like I don't think any of that matters compared to like the sheer like economic inertia. And this is also why I'm so like fervently like a multi-chain believer, that like I think all of the blockchains are all gonna grow and scale and will all be relevant, and that's because I think there's enough time and there's like enough space and enough market for everybody, that every single one of the blockchains that exist now, where serious effort and serious kind of like momentum is being built as we speak, and will continue to be built over the next 5-10 years, that will get them to a stage that looks like the kind of force of nature that Ethereum has now. And it just becomes, like then as blockchain gets bigger, they will just benefit more because it's just more money and more value, and there's just more for all of this capital to tap into. And then we, get to next level of like AI capabilities that can then, help this kind of stuff make better decisions and allocate it better and just optimize it even further. And it'll just further keep growing and growing and growing. So also this idea of like angst and like competition and tribalism, I think is so like foolish and kind of hilarious, really, because I'm so convinced that like if tomorrow Solana became 10 times as big as Ethereum, that would just make the size of Ethereum would just like shoot up. Like it would just be like a rocket booster on Ethereum itself.
Yeah. One thing I would say is that, and I kind of like some parts agree with Rune, but some parts I disagree in the sense that a lot of things that are like happening, I think at the moment on chain will not have that stickiness of actually creating use cases that people come on an ongoing basis. I think DeFi has been able to achieve that, some of the DeFi examples, but like it's very unclear, for example, if meme coins, for example, will achieve that. We've seen same thing with social fi, which is a really interesting and amazing category, but we haven't yet hit that kind of a momentum where, like, besides the kind of like an early euphoria, we actually see stickiness on the user base, and social applications are notoriously hard. So I think like all this discussion and kind of like drama and like, you know, the competition stuff is because, you know, there's not enough users us to not focus on this issue. When there's not enough users, what happens is that we start to argue like, you know, boosting is better, and like we're not focusing growing the pie. We're focusing on like kind of like, you know, these comparisons that should be that relevant. It's kind of the same. Maybe similar debate will be like if people would be debating between AWS and Google Cloud. You know, like people don't do that because, you know, you're not really like vested in with your bags in these technologies that you really want to like kind of like go and shout like, you know, people should use like AWS. Like people write good articles. How do you make the decision? But you don't really see this like day-to-day kind of like a fighting over liquidity and holders. And in my opinion, that's simply because not enough users. There's not enough users, even in DeFi. It's very small. It's amazing compared to a few years ago where we are. Most of the finance is still paper. Most of the finance is paper and digital bits, not blocks. And I think that's where we are today. So like, as my previous kind of like point is that we don't see that innovation. So like, what's exciting to see the same thing being copied and pasted to these other networks, besides giving the basic utility, but like the things that actually move needle is the new innovation. And I would like to see like reports of let's say whoever VCs or whoever like are writing these things to get better deal flow. Like they should like focus on like what is that incremental innovation and where it is happening, you know, and kind of like measuring that. That's like exciting actually, and bring us closer to adoption. And innovation doesn't mean that you have to come out with a complex thing. The most simple, the most scalable innovation is simple, because simplicity scales. And that's why I think like kind of like if you get to a point where people are building new stuff and kind of like pushing the innovation and accelerating that, whatever chain it is, then we focus less on actual like, you know, which chain is the best, because we won't give a shit about it, because we just want to see and use things that are new and novel.
Yeah, so as somebody who, you know, obviously whenever I report something, I'm doing it like after events have happened, right? So I'm just always trying to follow the action. But like, I also don't want to miss a story. So I'm always trying to think like, where could this go? And, you know, sometimes when I hear Ethereum people talk about Solana and kind of dismiss it for just being the center of meme coin activity and like, that's not important and blah, blah, blah. It does remind me a little bit of, you know, when Bitcoin maxis or whoever used to dismiss Ethereum during the ICO craze and blah, blah, blah. And I'm not saying you were doing that, Stani, because you've had a much more nuanced, you know, take on how you were looking at it. But, you know, a part of me is like, oh, well, it could still, you know, grow into something that's more serious and long lasting. Yet at the same time, I do also understand the meme coins were or are just a little bit more like mercenary, and it's for like short-term thinking. And I think that's why maybe even though the Ethereum ecosystem is going through, frankly, in my opinion, just a lot of trouble. You know, we haven't even talked about all the criticism of the foundation and Vitalik and, you know, all those things. So we haven't even gone into depth into issues about like the fragmentation and scaling, and we've touched a little bit on the L2s being parasitic, but like I basically feel like there is something more to the fact that it is true. People who participate in DeFi are probably more long-term participants than people who have been participating with meme coins. So, and it's not to say they're completely different groups. Obviously, I'm sure there are people who do both, but anyway, so I do look at it all and do wonder like, okay, where could this go? Because I could see it really going in either direction, where Ethereum prevails or Solana takes its mantle, or maybe they just coexist. So just to cap off our conversation, because Rune alluded to this in the beginning and it was so interesting, where he talked about how he felt like, what he's thinking about, or where he looks to where this is going, is how AI could be used in DeFi. And I wondered if you two could just talk about where you think that trend is headed, or what that future might look like.
First of all, everyone in tech or in any kind of sort of future-looking headspace right now, I think is getting this pervasive feeling that AI literally impacts everything. Like there's barely anything you can look at in your daily life or professional life or sort of anything that is not going to be affected by AI. So I don't think it's like very radical to be like, yeah, crypto will change because of AI and DAOs will change and so on, because it's obvious, because even like, paintings will change or something, right? I mean, something as ridiculous as you would never expect. I mean, I'm reminded of this like joke about how there's a limit to decentralization, right? You'll never get like decentralized running shoes, right? Like blockchain is never going to impact your shoes, right? But AI will probably impact your shoes, right? In fact, like every part of
By
your
the
shoe will
way,
be.
I did once chat with a woman who bought, I think she bought 17 pairs of those step-in shoes. She
Oh,
said it
right.
cost her
Okay.
like $17,000 and she was making a lot of money and then was not. But anyway.
Okay, I guess maybe we did get decentralized running shoes, but maybe they weren't that great after all, right? Well, I'm sure the AI running shoes, whatever the hell that ends up meaning, will actually be great, right? And they'll be better than the alternative, at least on some metrics. Anyway, so AI is just such a massive thing; it impacts everything. Everybody in like investors and so on, and business leaders, they're thinking about like, what's the story on AI, right? Like, how do we tap into that? And the case I'm trying to make to people is that DeFi specifically is the single most powerful leverage point for like, how do you apply AI to the real world, to anything basically? Like, how do you transform basically sort of intelligence power or intelligence capability into economic value and benefits for people? And there's just nothing where it sort of scales more directly and applies more directly than through DeFi. And that's really because like fundamentally AI is this kind of like abstract, like digital sort of, like, yes, abstract thing that is not really, it's hard to grasp exactly what does it do and sort of where do you use it directly. And DeFi is literally just like, it's the thing of like, okay, we have this thing called blockchain, which is this sort of magical internet money. And then DeFi is like the process of, okay, let's turn that into useful stuff. So it's sort of naturally the rails of like, you take AI and you then like apply it to things like, business financing and pricing stuff and, allocating resources and all of these things that then can result in like one day somebody, I don't know, building an AI shoe or something, right? Or like that comes sort of downstream of initially DeFi becoming more and more powerful because it is capable of really tapping into the value of AI, and then it results in much better allocation of capital towards much more innovative businesses that then in turn, are the ones that are the best at tapping into AI and so on, right? And so in Sky, like a key piece of the transformation into Sky was to sort of prepare the entire network and ecosystem end to end for what is it like to be able to properly tap into the potential of this kind of future. What do you need? Like, what's the infrastructure you need to be able to really tap into that? And I think the most important answer is structured data, right? It's like you need to go from sort of like the language and the way you communicate should go from being more like vibes and hanging out and like the kind of the internet speak and forum posts and that kind of stuff. It should go from that and then into these like very like something that almost looks like code, right? So to accommodate that, we built this thing we call the Atlas. And the Atlas is basically, we later found out, I mean, we didn't really know what we were building at the time, but it turns out it's something like a legal system for Sky in a sense, or it's like half legal system, half AI prompt, perhaps is a way to think of it. And it just turns out to be like a very powerful way to scale up an organization, because what it means is like all of the knowledge, all of the rules, all of the processes that are basically developed enough to be sort of like more or less like set in stone, or at least like persistent processes that are now like how everything in the ecosystem runs. They're then available in this at this sort of single source of truth called the Atlas that is voted in through the governance. And basically it replaced the earlier system we had of at the time called MIPs, like maker improvement proposals. It's like the old school approach of like you make one proposal and then you make another proposal, and then you sort of like stack them all on top of each other, and then you apply them all equally. While the Atlas is more like a tree structure, which is what gives this kind of structured data. And yeah, it just turns out it's incredibly useful for then. Let's say the new deep research feature that just came out from OpenAI, right? So because of how the Atlas is structured, it's very convenient to take sort of sections of it that relate to something like how the Sky ecosystem currently manage legal resilience of real assets or something. You can sort of easily isolate all knowledge related to that in the system, put that as a prompt into ChatGPT deep research, and then just have it come up with ways to improve it with sources and all of these stuff, right? In a format that then can easily be sort of put back in as a proposal. So you're really opening up for the ability for normal people to just be armed with ChatGPT deep research or other AI tools like that, and then actually contribute directly into like the sort of the brain of the system in a way that in the past, you'd have to be a real expert to contribute at that level.
I think the DeFi is and on-chain is a really kind of like a perfect substrate for AI agents because of you can guarantee the execution. You have less surprises from that perspective, the transparency and like the permissionless nature. I think it's just a great combination. I even could imagine that a lot of the activity that is happening in DeFi a few years from now is AI agents based capital allocations, and especially with Aave v4, the users are able to position themselves on the risk curve, so you can participate in a very low risk pools, or you can add risk gradually by positioning and supplying to different pools. So what is interesting here is that I think that optimization of that behavior will be AI agent driven. Adjusting risk parameters will be AI driven. And as Rune said, I 100% agree. There's a lot happening within a DAO or a decentralized protocol infrastructure where you kind of need that automatization, and you want to reduce the overhead that comes from governance. So governance can be a really good tool, and you can create a really good consensus decision, but it can be a bottleneck, and it can be, especially in those cases where these changes are very minimalistic. So I think it's going to be a big area, and regardless what network you're building on, for DeFi builder, focusing on this kind of like a intersection between AI agents and DeFi is really, really fascinating. And I think that's also like an overlooked area where I wish there would be more interesting innovation besides the basic AI agents I've seen so far. So it looks very bullish to me.
Yeah, I honestly remember, I think in like 2018 or something, I did an interview with Dominic Williams of Dfinity, and he kept saying that the way the Dfinity DAO worked was that, yeah, there was some AI aspect, but when I was like drilling down into the details, it was very manual. Like the users had to vote, and like maybe they could delegate, but like that's not an AI. Like if a user is making a choice, and he kept insisting there was an AI. But anyway, point is, when I look at the AI agents, I'm like, oh, maybe like, I personally, I think he was trying to spin me, because like there just was no AI aspect to what he was saying. He was using the word, but like when I was drilling down into the details, he wasn't describing anything like that. But I'm like, oh, like in the future, actually, we could, instead of me delegating, I could have my own AI agent where I tell it like, these are the risks I'm comfortable taking. These are the ones I'm not, like taking into that account, taking all that into account, please vote accordingly or something, or whatever you think is the best way for the DAO to go. And anyway, so we'll see what happens. But you guys, this has been a super fun and fascinating conversation. Where can people learn more about each of you and your work?
Aave.com for Aave, and overall for Avara, avara.xyz.
Yeah, and for Sky ecosystem, you can go to Sky.money to use the products, or Spark.fi. And you can follow me on @RuneKek on Twitter.
Okay, perfect. Well, it's been a pleasure having you both on Unchained.
Thank you so much.
Thanks for having us, Laura.
Thanks so much for joining us today. To learn more about Stani and Rune, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Pam Majumdar, and Margaret Correa. Thanks for listening.